Hi, we've just had an historical day. US stock market has experienced a worst single day point drop in the recorded US market history and the worst single day percentage drop since December 2008. At the beginning of the market today, we've also experienced a market trigger circuit breaker event. The same event happened last time was in 1997. I can spend the 5 minutes we have here to talk about why, what triggered it, coronavirus, the crude oil war between Russia and the rest of the oil producing country and more. But by no means I'm qualified to advise on stock trading's market. That's the job of your broker and your financial advisor. But I am here to talk about one thing: recession resistant investment. Does it exist and where to find it? So recession resistant investment, does it exist? And the answer is yes, if you know where to look. Let's quickly look at two charts. The first one is the stock market chart during 2008 subprime crisis. A lot of us remember that one. US household on average lost 25% of its net worth. That's every $100 you've had, you would have lost $25. A lot of foreign investors actually experienced a worse financial loss. What triggered it? Us. US subprime products triggered this worldwide financial crisis. The second chart is also from 2008. It's from National Association of Real Estate Investment Trust. What jumps out at you? Well, the US real estate market also fell sharply during that year. But one sector actually made money in 2008, and that is, right, self-storage. Why? What happened? For those of you who follow Mainstay Global and its recent investment focus in the self-storage sector, you know we have a lot of specific data we can share with you. First, recession resistant. Self-storage is recession resistant. Why? Well, in the economic downturn, what happens? Closing of businesses, loss of jobs, followed by drastic household spending reduction. And when businesses closing its doors and facing possible liquidation events, they will have to look for places to store their inventory. And if you lost your job, whether or not you're planning to move to a different state to look for the job, most likely you'll have to store your household items during the move. And if you lost your home, like during the 2008 subprime crisis, and won't be able to purchase for a while, you're going to have to downsize, which also means you have to look for storage. So, okay, it's understandable that why self-storage is recession resistant. Now that we zoomed in on the sector that is recession resistant, what about after the crisis, after market downturn, during the normal market cycle? Well, historical data has shown that self-storage is a great cash flow vehicle during the up market cycles as well, where we are out there spending, buying, storing, and spending more and storing more. We have to admit, we Americans love to buy stuff, hence the largest consumer market economy, right? So we've talked about how self-storage is recession resistant, but also performed really, really well as a great cash flow vehicle during other market cycles. On top of that, what if we can make our self-storage investment even more efficient by overlaying technology and make it completely unmanned operation? If we can do that, will that generate even more to our investment bottom line? Well, we'll talk about technology aspect of our self-storage investment strategy during the next video. In closing, while I'm not qualified to comment regarding the stock market, one thing for sure is that this too will pass, even if it means it'll get worse before it gets better. For now, I wish you well diversified and be able to store and grow your wealth.